Welcome back to the Deep Dive. Today we're diving headfirst into the institutional crypto investment world. It's always dynamic, often pretty surprising, especially when the big players make these bold moves.
Yeah, those high-stakes decisions, right? Especially when the market's doing its usual roller coaster thing, these firms can really shape whole sectors.
Exactly. It's like watching a chess grandmaster in a storm, you know? You really want to understand the thinking behind the move. So our mission today is to zoom in on one specific firm, one that's always talked about, Cathie Wood's Ark Invest.
Ah, yes, Ark. Known for being forward-thinking, looking at disruptive tech,
Yeah.
they definitely don't shy away from going against the grain.
That's them. And our guide for this is an insightful article from Zach Abrams on the block. It's called Ark Invest's Strategic Crypto Investment Surge. It details their latest big crypto-related buys, specifically as of Friday, August 2nd, 2025.
A very timely piece.
Right. So the core question for this deep dive, we want to unpack these buys. We're talking nearly $47 million in crypto assets across 3 of their funds. What's the strategy here?
What does it tell us about their long-term belief in digital assets?
Precisely. And maybe more importantly for you listening, what can you learn from how a major player like Ark handles the, let's face it, often wild crypto markets?
Oh, and before we really jump in, just a quick note. If you find these deep dives valuable, it really helps us out if you subscribe, maybe leave a comment, or hit that like button.
That engagement genuinely helps keep this content coming and gets it in front of more folks who are trying to understand what's really going on.
It really does. Okay, so Ark Invest. Their moves are compelling because it's not just tinkering around the edges, is it?
Not at all. They're deploying serious capital. It signals this deep, sometimes contrarian belief in certain parts of the crypto world. When a firm like Ark, known for these high-conviction plays, moves like this during market swings, well, you've got to look past the daily price charts.
You have to think about the strategic foresight, the long game. Exactly. It's not just seeing a dip and thinking bargain. It feels more like they're validating a long-term vision, even when many others are still wary or, downright skeptical about crypto.
Yeah, it definitely speaks volumes about their confidence in where the digital economy is heading. Okay, let's set the stage properly then. Section 1, Ark Invest's bold play the overview. So Ark Invest, under Cathie Wood, they've really built this reputation, haven't they? Not just trend chasing, but investing heavily in what they see as genuinely disruptive innovations.
Absolutely. Their whole approach is built on high conviction, a willingness to ride out the cycles, and yeah, as we'll definitely see today, that famous buy the dip mentality.
It's almost their signature move, right? They don't see a price drop as a signal to run away.
Quite the opposite. It's a strategic opening, an opportunity to, well, double down on their long-term ideas. They often act countercyclically.
It's because their philosophy is anchored in identifying these big transformative technologies, isn't it?
Precisely. They're not easily spooked by the day-to-day noise, the short-term swings that cause panic elsewhere. They operate with this deep sense of where technology is going long-term.
Believing these innovations will fundamentally reshape things over, say, the next decade.
Right, so when we see them buy the dip, it's not impulsive, it's calculated, it's part of the plan. They see these setbacks as chances to increase exposure to future winners.
Future market leaders,
Yeah.
essential infrastructure.
Yeah. It shows their conviction that these temporary hurdles don't really change the long-term story.
And the sheer size of this recent investment, it really hammers home that commitment. We're talking one single day, Friday, August 2nd, nearly $47 million in crypto-related buys.
47 million, that's significant capital by any standard.
And importantly, it wasn't all piled into one thing. It was spread across 3 of their big funds. That kind of deployment, on one day, it's a clear statement, wouldn't you say? A loud signal about their belief in this space.
Oh, it's absolutely a clear and emphatic statement. Nearly $47 million across 3 funds in one session. That tells you these aren't just isolated speculative bets.
No, they're part of a bigger picture, a broader strategy.
Exactly. It points to a conviction that goes way beyond daily market jitters. And looking broader, this isn't just a one-off, right? It fits their ongoing strategic posture.
They've consistently been bullish on the future of finance, digital assets, blockchain.
Yeah, they really have. So this persistent, large-scale investment, even in an asset class known for its volatility, it suggests a really deep-rooted vision for diversification and future growth.
They're not just chasing trends. These feel like foundational bets on major economic shifts.
Which brings us back to the listener. What signals can we pull from these moves in such a fast-moving market?
Right, that's the key takeaway. For you listening, why does ARK's strategy matter? Well, because they're essentially doing a massive amount of homework for you. Research, due diligence, risk assessment.
And it's all informing these moves. They're not random. They're based on deep analysis, macro trends, tech breakthroughs, the regulatory scene.
So by watching where they put their capital, especially when assets are under pressure, you get these invaluable clues about where the so-called smart money sees long-term value.
It's like getting a peek behind the curtain, isn't it? Seeing what the professional investment committees are thinking. It gives you signals about where value might be building up.
And how a major player navigates these choppy waters. It helps you understand the bigger story, not just the daily headlines.
Well said.
Okay, let's zoom in then. Section 2. Spotlight on Coinbase, ticker COIAN. A big bet on a centralized exchange. The source tells us ARK snapped up about $29.8 million worth of Coinbase shares on that Friday.
Almost $30 million. Okay.
And here's the really interesting part about the allocation. The biggest slice, $22.6 million, went straight into their flagship ARK fund.
ARKK, right? That's their main innovation fund.
Exactly. It's their purest expression of belief in disruption. So putting that much into Coinbase, specifically within ARKK, that signals incredibly strong conviction, doesn't it? A foundational belief in Coinbase's role.
It absolutely does. Putting $22.6 million into ARK, the fund designed for cutting-edge disruptive companies, that's a powerful signal. It shows ARK sees Coinbase not just as, a place to trade crypto,
But as a critical piece of the puzzle.
yes, a foundational pillar for this whole emerging digital economy. ARKK covers genomics, robotics, AI, and crucially, blockchain tech.
So Coinbase, fitting in there at that scale, suggests ARK thinks it's pivotal for bridging traditional finance in this new decentralized world.
It's a bet on the essential infrastructure needed to connect those two realms.
And this is where that buy-the-dip strategy just comes roaring into view. It's classic ARK.
Okay, lay out the context.
Right, so Coinbase stock, COIRN, it took a big hit on Friday, down 16.7%, a significant drop.
Yeah, okay, 16+% in a day. Why?
The source says it followed weaker than expected quarterly earnings.
Yeah.
They missed the mark.
Ah, the classic earnings reaction.
Exactly. So
Yeah.
what did ARK do? Did they run? No. They specifically bought into that decline. It perfectly embodies their philosophy.
It's not just about getting it cheaper, is it?
No. It's a statement, a profound one, about their long-term belief in the company's fundamental value, its future path, even when things look rough short-term and the market's skeptical.
And the timing, the philosophy behind it, that's what's really revealing here. Buying the dip, this isn't just bargain hunting. It's a calculated strategic move. It screams high conviction.
Especially for a bellwether like Coinbase, often seen as a proxy for crypto overall.
Right. When a stock like that drops hard because quarterly earnings miss analyst forecasts, which are almost always short-term focused, ARK sees an opportunity.
They're basically saying,
They're essentially saying, look, the market's overreacting to this short-term stuff.
Yeah.
Our core belief about Coinbase's long-term potential, its vital role in the digital asset world, that hasn't changed. In fact, maybe this is a great chance to add shares at a better price.
So for you listening, watching ARK double down on Coinbase when the stock's under pressure, what's the insight?
It shows that sophisticated investors like ARK often prioritize the long-term story, the fundamental shifts, over fleeting quarterly numbers or market sentiment. It's about seeing past temporary issues to the lasting structural value.
Makes sense. So building on that, what are the wider implications here for the whole crypto ecosystem? ARK keeps pumping money into Coinbase.
It strongly suggests they believe you still need these regulated, centralized gateways for crypto to really go mainstream.
Coinbase being a prime example, leading, regulated, a crucial on-ramp for retail, yes, but increasingly for institutions too. So what does ARK's play signal about the future of this more, let's say, traditional way into crypto?
It feels like they're saying, look, however decentralized finance becomes, you'll still need reliable, compliant, easy-to-use bridges for most people and institutions.
And Coinbase is positioned perfectly as that bridge.
That's a strong interpretation, and I think it holds water. This investment can definitely be read as ARK seeing regulated on-ramps as vital for mass adoption, even as DeFi grows. Stepping back, it might suggest a broader institutional expectation. a future where the crypto market is more mature, more regulated, and exchanges like Coinbase are even more integrated into traditional finance.
Bridging that gap between the old and the new.
Exactly. While DeFi is innovating like crazy, the easiest, most compliant path for many, especially big institutions, often runs through trusted, centralized players.
So Ark's big bet on Coinbase highlights their belief in this evolution, where regulated and decentralized parts don't just coexist, but actually help each other grow the whole space.
Precisely. They seem to see both as essential components for the future growth and maturation of digital assets.
Okay, that really clarifies the Coinbase piece. Now let's pivot. Their other big investment is just as interesting, maybe even more so because it's, well, different. We're diving into BitMine Immersion Technologies, ticker BMNR. The Ethereum treasury play.
Ah, BitMine, yes, definitely worth digging into.
So on Friday, Ark Funds added $17 million worth of BMNR shares. And again, ARK got a big piece of that $11.6 million.
Okay, another significant chunk into ARKK.
But here's the kicker, and this really shows the conviction.
Yeah.
This wasn't just a one-off Friday buy. The source points out it followed 2 back-to-back buying sessions earlier that same week.
Really? Earlier in the week, too?
Yep. Another $20 million worth on Monday, and then $15.3 million on Tuesday.
Wow. Okay, so add that up.
We're looking at roughly $52.4 million poured into BMNR shares in just 5 trading days.
$52 million in a week. That's aggressive.
And wait, there's more. To really underscore the long-term commitment across all its funds, Ark now holds over $188 million in BMNR share.
Over $188 million total.
That rapid build-up, the sheer size of the holding, it shows conviction way beyond a quick trade, right? They're clearly building a major strategic position using market conditions to load up.
Yeah, the speed and the volume are striking. Over $52 million in 5 days, leading to a total stake over $188 million. That suggests an extremely high conviction play. It's not a small position.
No, it's a significant allocation. It signals a belief in some kind of deep long-term value there.
That kind of sustained, aggressive buying often hints at a strategic accumulation where they think the market's got it wrong and they're taking advantage.
It underlines a belief that the asset is fundamentally undervalued compared to its future potential, and they're acting on that belief with serious capital.
Definitely. So let's unpack BitMine. What exactly is it? Because it's not your typical crypto company.
Right. It's identified specifically as an Ethereum treasury company. That term itself is interesting. Before we get into their holdings, can you explain what that means?
Yeah.
Especially compared to, say, a traditional company's treasury.
Sure. Yeah, Ethereum Treasury Company is distinctive. It points to a business model that's quite different from a miner or a standard investment firm. Essentially, a company like BitMine focuses primarily on accumulating and holding Ether, ETH, as its main asset.
Like a corporate treasury, but holding ETH instead of dollars or euros.
Conceptually, yes, but it's more active than just holding. It's a strategic accumulation based on a long-term belief in Ether as a core, value-accruing asset, maybe analogous to how a company might hold gold reserves.
So they're not just speculating on ETH's price swings.
No, it seems much deeper. It's a fundamental bet on the value, the utility, and the long-term growth of the entire Ethereum network itself.
And the source specifically mentions it's Tom Lee's Ethereum treasury company. That adds another layer, given his profile as a strategist and crypto bull.
It certainly adds context, yes.
Okay, that framing helps a lot. So, sticking with BitMine, the source really highlights its dominance in this particular niche.
How so?
It says BitMine currently holds the most ETH out of any Ethereum treasury company, and it also has the largest market cap within this specific category.
Okay, so it's the leader in this space. How much ETH are we talking?
As of the source, a really substantial 625,000 Ether.
Wow, that's significant.
And get this, their stated goal, their ambition, is to acquire and stake 5% of Ethereum's total supply.
5% of the entire network supply. That is incredibly ambitious.
Right. That goal alone tells you a lot about their long-term vision.
Indeed. Holding 625,000 ETH already and having the largest market cap in this niche, that establishes them as a major player in this still quite new segment and aiming for 5% of the total supply. That's not just ambitious, it's strategically massive. It implies they want to be a major long-term holder and participant in the Ethereum ecosystem.
Potentially giving them significant influence and tying their success directly to Ethereum's health.
Exactly. It's a huge vote of confidence in Ethereum's future utility and value.
Okay, and connecting back to Ark's strategy, Let's look at BitMine's stock price, because this is another classic Ark buy the dip situation.
Right, you mentioned they bought heavily last week. What was the stock doing?
The BitMine stock fell about 8.6% on Friday, closed around $31.68. But here's the bigger picture, underscoring Ark's conviction. The stock was down over 31% in the past month.
Down over 30% in a month. Ouch.
Yeah. So this wasn't just a blip. It was a sustained, significant decline. And Ark was buying aggressively into that.
Another clear case of buying the dip, but into a much steeper, longer drop than Coinbase saw that Friday.
So what does that tell us about Ark's belief in Ethereum's ecosystem, buying so hard into a stock down over 30% in a month?
This really highlights the depth of their conviction. When a sophisticated player like Ark buys aggressively into that kind of drop, it says something profound. They fundamentally believe in the underlying tech and the business model. It's not just bargain hunting. It's a declaration of faith in the long-term story of Ethereum and BitMine's role in it.
It suggests Ark thinks the market is totally mispricing this, focusing too much on short-term pain.
Precisely. They believe the long-term value proposition holding and staking a massive chunk of Ethereum massively outweighs the current volatility or that month-long slide.
So the lesson for listeners:
it shows a deep conviction can lead smart investors to see huge downturns not as panic signals, but as prime accumulation opportunities. They're clearly looking way past the current storm towards Ethereum's long-term foundational growth.
Powerful stuff. Okay, let's dig into the why behind this BitMine bet, the strategic rationale. First, investing in BMNR gives Ark indirect but significant exposure to ETH's value and growth, right?
Which is key because it lets them get that exposure without necessarily holding ETH directly in their traditional funds, which can have regulatory hurdles.
Exactly. But then there's the really crucial part, the staking component. The source highlights BitMine's goal to stake 5% of Ethereum's total supply. Can we quickly explain staking on Ethereum and why that goal is so central to Ark's likely strategy here?
Absolutely. So staking on Ethereum, essentially it's locking up your ETH to help secure the network and validate transactions. It's fundamental to how Ethereum works now with proof of stake.
And you get rewarded for doing that.
Yes. Stakers receive rewards new ETH, transaction fees for their contribution. It's an active participation model.
Okay, so when Ark invests in BitMine, which aims to stake 5% of all ETH, what's the bet?
The bet goes way beyond just hoping the price of ETH goes up. They're betting on the economic utility and the yield-generating potential of the Ethereum network itself.
Because BitMine, by staking all that ETH, is generating a continuous stream of rewards, like a yield.
Exactly.
Yeah.
It generates yield on their massive Ethereum treasury. This turns simple price exposure into an investment in an income-generating asset tied directly to the blockchain's activity and security.
Which raises an interesting question. Does this signal a bigger institutional interest in crypto yield, moving beyond just price speculation?
It certainly could. It points towards valuing the productive aspects of these networks.
And fundamentally, this huge investment in BitMine acts as a massive endorsement of Ethereum itself, right? The foundational blockchain for so much of DeFi.
Absolutely. It's a profound vote of confidence in Ethereum as the indispensable base layer for DeFi, for Web3, for the whole digital future. By accumulating and staking ETH via BitMine, Ark is participating directly in the health and growth of the network that underpins thousands of dApps, NFTs, most DeFi protocols.
So it's a bet on the digital infrastructure of tomorrow.
Precisely. It signals a belief that the real enduring value lies in these core utility-driven blockchains, not just the apps built on top. It's implicitly a strong bet on DeFi's continued growth too, since so much of it lives on Ethereum.
Okay, let's try and weave all this together now. Section 4, Ark's holistic crypto vision. Because this is where it gets really interesting. They're making these huge simultaneous bets on Coinbase, the regulated centralized exchange, and on BitMine, the deep Ethereum treasury and staking play.
It paints a fascinating, nuanced picture.
It really presents this duality, doesn't it? What does it mean for a big firm like Ark to bet heavily on both the established on-ramp and the underlying decentralized ecosystem at the same time?
That duality is exactly what's compelling. You've got Coinbase, the bridge, the regulated gateway needed for mainstream access, especially for institutions.
The established path.
Right. And then you have BitMine, deep utility-driven exposure to the heart of DeFi, Ethereum itself via holding and staking.
It's not a contradiction then.
I don't think so. I think it's a remarkably comprehensive, forward-looking strategy.
All right.
It strongly suggests ARK sees a future where TradFi and DeFi don't just coexist, they actively converge and work together.
So they're positioning themselves to capture value from different layers of the crypto stack.
That's how it looks. From the access points facilitating broad entry, right down to the core protocols powering it all, it's a multi-pronged bet on the entire digital asset landscape maturing.
Acknowledging that you need both the centralized bridges and the decentralized innovation for the space to reach its potential.
Exactly. Both seem critical in their view.
And the common thread linking both these huge investments is ARK's famous conviction and volatility.
Both buys happened when the assets were down significantly.
This willingness to lean into downturns, it's such a hallmark of their strategy. Cathie Wood talks about it all the time.
Yeah, they've made it famous.
So what does this tell us about their risk assessment, their time horizon, especially in crypto, which is known for being so volatile?
It tells us they have a very particular view of risk and an exceptionally long-term horizon. They seem to view volatility not just as risk to be avoided, but as a feature of young, disruptive markets.
A feature that could be used strategically.
By those with conviction and patience, yes. They're clearly willing to endure big, short-term drawdowns because their core thesis plays out over years, maybe even decades, as technology gets adopted and markets mature.
So for you listening, understanding this buy the dip philosophy is really valuable.
Absolutely. It shows how sophisticated investors might see big corrections in high-growth areas not as panic signals, but as prime buying opportunities.
If you have conviction in the fundamentals and the discipline to act, whether it's stocks or crypto.
Exactly. It's about that long-term view and steady hand during turbulence.
Okay, so let's bring it home. What's the so what for you, the listener, from this deep dive? These ARK moves, they're much more than just numbers on a trading screen. They're potent strategic signals from a major influential firm.
They offer real clues about where serious institutional money thinks the long-term value in crypto actually lies.
And we see two clear areas. Robust, regulated infrastructure for adoption, that's the Coinbase bet.
Right. And then, simultaneously, strong conviction in core foundational assets and their utility. That's the Ethereum bet via BitMine.
So by studying these patterns, the why behind them.
You can get a much deeper, more nuanced grasp of market sentiment, potential long-term trends, and just the whole evolving story of crypto as a legitimate asset class.
These aren't random bets. They're part of a consistent strategy that shows a deep belief in the digital economy's future.
Yeah, ARK's actions here serve as a fantastic case study. They help connect the dots between market moves, tech development, and long-term investment thinking. It helps you see past the daily noise to the bigger shifts happening.
Well said. And that really wraps up this deep dive. We've dug into how Ark Invest, led by Cathie Wood, is making these aggressive, strategic crypto investments.
Targeting Coinbase, the critical on-ramp.
And BitMine, offering that deep yield-generating exposure to Ethereum's core.
And their consistent buy-the-dip approach, especially in this volatile market, really hammers home that strong, long-term conviction.
Belief in both the regulated gateways and the fundamental building blocks. It's a bold vision unfolding right in front of us.
Which leads us to a final thought, something for you to ponder as you continue your own explorations. Given ARK's clear, consistent bet on both the on-ramp like Coinbase and the foundational powerhouse like Ethereum via BitMine, what might this duality signal for the next phase of institutional crypto adoption?
Interesting question.
Could we see even deeper dives into core blockchain infrastructure, more focus on utility and staking across different protocols?
Maybe a renewed focus on other layer ones besides Ethereum that offer similar potential.
Perhaps. What other corners of the digital asset world might attract these kinds of strategic long-term plays from big investors, even when the market's shaky?
Lots to think about there. It's a complex space, always evolving.
And watching these sophisticated moves gives us a powerful lens to understand where it might be heading.